Well, the price of gold is hovering above the record mark of $2,700 an ounce this morning. There you see a live look at the December contract of gold, $2,752 US dollars per ounce. Investors are looking to safety, many traders say, within the gold market amid declining rate environment and, of course, the wild card of the U.S. election, among other factors. Let's go to an expert in the sector for his views. Daniel Ghali is senior commodity strategist at TD Securities. Daniel, thanks a lot for joining us.
Thanks,
I guess the big question that our viewers will have is: do you see further gains ahead for gold?
Yeah, thanks, Paul, and thanks for having me on the show. Do we see further gains ahead on the horizon for gold? I think certainly in a medium-term outlook. What's interesting about the ongoing rally in gold is that really anywhere you look, you actually can't find much evidence of substantial inflows heading into gold. Right, so some of the largest gold investors, in fact, according to our analytics, are holding on to an extreme amount of gold relative to history. Elsewhere, physical markets have actually come to a standstill. And so I think what the gold market is actually telling us is that there is a lot of anxiety surrounding the upcoming U.S. election season. Perhaps it's not a story of a substantial amount of inflows heading into gold, but rather a story that it takes a brave soul to sell gold into this specific election.
Yeah, you used the phrase in some notes that the gold price continues to, quote, melt higher. That's similar to a phrase we often hear in equity markets when U.S. equity markets are melting up or melting higher. And I think that's a momentum call, isn't it? That there's a reluctance to sell and people are buying because they're buying.
Yeah, absolutely. I think, there's a lot of reasons to buy gold. Geopolitical uncertainty, particularly in the Middle East, is probably at its highest levels since the Gulf War. The Fed has just entered into an easing cycle. And to be clear, historically, this has been associated with good returns in gold on several month basis. But at the same time, there is a lot of evidence that investors have actually front run all of this and have positioned themselves already for the ongoing outlook. Central banks are another very commonly debated portion of the gold market. And according to the official data, central bank buying activity on a 6-month moving average basis has actually trended closer to its 5-year lows. So a lot of the stories that you hear in gold markets are actually in flux, and yet we're not seeing the selling activity that you would typically anticipate as a result of these, potentially because of the U.S. election season.
Daniel, one of the areas that we debate often is this idea that there is a lot of demand for gold. But to your point, there's some questions about where it's coming from. And central banks is certainly one area. They own a lot of it, and they are incrementally adding more. Do you think that thesis is going to change much? And what's the risk that we see some selling at some stage, which might cause a bit of a panic in the gold market?
Well, I think central banks are going to buy gold for the foreseeable future. Right, emerging market central banks are under-owning gold at the moment. And so there is a long way to go before they reach levels that are comparable to the West. That being said, this is actually a structural shift that started sometime in 2019. The war in Ukraine certainly accelerated that trend, but this isn't necessarily the driver that's going to continue to lead to further gains in gold. In fact, they don't necessarily have a rush to buy gold in the same way that investors might have. And so I think the story when it comes to gold prices, central banks are important to that story, but they're not the entire story.
Let's just circle back to the U.S. election. I think what you're saying is that because it seems to be such a coin flip as to who wins, the White House and indeed the two houses of Congress, that uncertainty has been positive for gold. What happens, Daniel, if we get a disputed outcome in the election? From fairly senior Republican voices have continued to voice skepticism about the integrity of the account, expressed a willingness to challenge the outcome. What happens if the day or two after the election we have a disputed outcome?
Well, we can certainly expect a significant amount of volatility. A lot of that is going to or suggest that gold prices might trade higher on that uncertainty. Certainly, a big contingent of the speculative community that looks at gold isn't going to be willing to sell gold in that environment. So even though other factors might be trending in that direction, whether a Trump presidency could mean higher inflation on the horizon, a rethink of the Fed outlook as a result of that, but if the U.S. election is contested, that will delay these sales. Now, the question I have on top of my mind is that going to create pent-up demand to sell gold after the election season? And that remains to be seen.